Hi everyone, welcome to Thursday. Normally every Thursday what we do is a share and review. However, this week I thought I would take a look at the property sector. Reason being is I saw an article in the paper over the weekend and it was encouraging investors to actually purchase shares into Precinct Properties. So I thought let's take a look and do our comparisons and do some research. Naturally, before I share my screen, remember that this is for educational purposes only, definitely not intended to be personalised financial advice. If you're looking for that, then you do need to go and have a chat to your own financial advisor. Okay, let's take a look. Now, for the purposes of this, I've just chosen Precinct Properties. And the reason for that is because in this newspaper article, it was someone from Precinct Properties recommending investors to naturally invest into the shares on Precinct. The reason for making that recommendation was to get people onto the property ladder rather than just buying one property, because like the article said, it is becoming quite cost prohibitive for a lot of people to initially afford to have exposure to property. So Precinct Properties, they naturally invest into a lot of commercial properties, and by owning one share in them means that you've got exposure to all of their companies that they've got. With a share versus direct property, you have got a lot more liquidity. Now, Precinct Properties, I couldn't see that they offered direct property syndicates, but there are certainly other companies out there like Centuria that do, and we will take a look at Centuria as well. So you can see here that thereabouts, Precinct Properties roughly pays dividends every quarter. And according to this article, it was roughly around 6% dividend yield that they were providing. Now, I've got this over the 5-year chart, and as you can see, it's not really going very far. In my view, I've talked about this before, I don't invest into shares just purely for the dividends. That's a byproduct of it. However, there are people that do, and I've had viewers say how they've found it to be successful for them by investing just to gain the dividend yield. And that's great. There's no right or wrong. It's about deciding what your purpose is, what your goals and your methodology is going to be. Just remember that there's no one size fits all. So to me, just before running any scans over this, to me, Precinct Properties has really just been in a sideways trading band. And it's been in there pretty much around sort of September 2022. But let's pop our moving average on just to get an idea to begin with. So I'm going to choose a 200 for this. It's a very long, slow moving average. And you can see here that if anything, it's probably in a little bit of a downtrend. That's what that is indicating to me. Let's change this and make it a 30. And again, the share is really trading below that 30-week moving average. So if I was evaluating Precinct Properties just for the purposes to invest in it, at this stage, I wouldn't be doing that as a share possibility. But we're looking at it from other options and things as well. Now, let's do a comparison. I'm going to put on here, I'm going to put an NPF. Now, if you were using Smartshares, this is the ticker code for Smartshares New Zealand Investment Property Trust. And you can see here that basically, in the New Zealand Property Trust, it has exposure to about 8 different investment companies. So there's Kiwi Income for Property, there's Goodman's, obviously Precinct as well, Property for Industry, Argosy, Vital, Stride, and Investor Store. Now, that combined, so Kiwi Income for Property, that has about 17.5% exposure. Precinct Properties has about 16%. So if you invested into the property fund, New Zealand property sector through Smartshares, you'd be slightly outperforming Precinct Properties. And you can see here by that blue line. Now, just as another comparison, I'm going to keep that one there, but I'm also going to put on NZG. Now, that too is a Smartshare, and it invests into the NZSX 50, and it's weighted according to the exposure for the NZSX 50. So things like Spark have a lot more exposure than what some of the lesser companies have. It's not equal weight, it's invested exactly according to that. So you can see here by that yellow line, that's NZG, which is the NZSX 50. So that is well and truly outperforming both of those sectors. And if I look at these percentages on the side, nothing's setting the world on fire, to be honest. Precinct Properties is actually down about 22.15% for the last 5 years. The New Zealand Property Fund is down about 16, just under 16.5%, and the NZSX 50 is down just under 1%. So again, none of them personally would be a very good investment if you're looking at this particular time frame over 5 years. You definitely want to be having some good dividends for that. Now, I'm going to take off NZG, and just to get an idea, I'm just also going to make a comparison, and I'm going to put on FNZ this time. Now, this here is again a Smartshares investment. It invests into the top 50 companies. However, it has roughly an equal weight. So one share has a maximum exposure of 5%. And again, you can see it's not setting the world on fire. It's outperforming both Precinct Properties and the property sector. However, it's still minus 3% for the 5-year period. So again, it's nothing to get excited about. And if you watch my Tuesday videos, you'll see that we've really not been going anywhere for a while now for the New Zealand market, although it has recently hit some all-time highs, which is encouraging, but it certainly hasn't been an absolute hit out of the park type of performance. Now, I'll take both of these off, and this time I'm going to take a look at the Australian market. I'm actually going to look at Centuria. So Centuria is an Australian-based company, and they do have exposure here to the New Zealand market. Now, naturally with Centuria, you can buy into the shares, as I've pulled up on the screen. They also do individual property syndicates. So for as little as $10,000, you can buy a parcel into one of their properties that you might be interested in. They have several properties available. I personally have invested in Centuria, and this is where, to me, it's really important to make sure that whatever investment you're going to do is right for your time frame, your goals, and your objectives. Reason I say that is because I had an accountant recommend to me that instead of going and buying into the property syndicates that I was doing as one-offs, their recommendation was to actually buy into the shares, which didn't suit my goals or my objectives, which were, I didn't need the money, it was long-term money. However, I wanted to receive a regular income from it. And if I own the individual syndicates, then that's exactly what was happening. Every month I get a regular distribution from them. You don't get monthly distributions from owning the shares, as you can see here. They are roughly paying quarterly, which is great. However, it can change. Now, obviously, property values go up and down. Quite well aware of that. The thing that I wanted with owning the direct property is that, yes, there is a lot more risk because you're having exposure to one property as opposed to their whole sector, which is what you've got in the share market. But however, you could have good performers and you could have underperformers. And I've certainly got a mixed bag because I do have quite a few. But to me, it's about my goals, my objectives. And that was purely why I have gone into the properties individually themselves as opposed to buying a share. And again, if you look at this, and you look at that dashed line, that's really been going sideways for the last sort of 2.5, 3 years. You can see that. But let's put our moving averages on and just get an idea. Let's first of all begin with 200. So that's really, like I just said, flatlined, the share is above it. So that's a good start. Let's now change this to 30. There we go. In Australia, there is definitely trading above that. So that's great. We'll also put on the 15 period moving average as well. And again, it's trading above both of those. So that is a good start for Centuria Investments. Okay, let's take them both off. And this time, I'm going to compare it against the ticker code ASP. Now, it is a smart share. It is based on the New Zealand Stock Exchange, but it's got exposure to Australian property. Now, Centuria on this is their main holder. That has around 6.5%. Everything else is sort of around 5%. So if I look here, it is slightly outperforming Centuria. So over that 5-year period, Centuria investments have been up around 13.5%, whereas if you went into the ASX property sector, you're looking at about 16.5%. So it's outperformed at round figures by about 3% over that same 5-year period. Now I'm going to leave that on, and I'm also going to do a comparison against the All Ords. So there you go. The All Ords, again, is well and truly outperforming both Centuria individually, the property sector for Australia. So the All Ords is up about 36.6% over that 5-year period. So that was really what I wanted to show you, was it's really important to do your research, but before you do the research, actually make a note of what your personal goals and objectives are for investing. Are you needing it for income? Do you not need the money so you don't have to worry about liquidity, for example? What are your reasons? Because that really is your North Star as to where you're going to invest, and make a start to do your research. So that's why I wanted to bring up that property sector, because there's lots of fors and against for it. I definitely understand that, but it does boil down to you as a personal investor as to what is it that you're wanting to achieve. Really hope that helped. I really did quite enjoy reading that article. Naturally, they're trying to promote their own property syndicates, being Precinct. Nothing wrong with that. But for me, it is about doing your research, but knowing what it is that you want to have as your outcome, because that will ultimately guide you into what decision you should be making when it comes to your investing. Like I said, hope that helps. Happy to help if there's anything that you would like me to review, any shares, or if there's any questions you would like me to answer. Just reach out and we'll see what we can do. So until next week, take care.